Morningstar recently announced that would be introducing independent research on funds and fund managers to retail and institutional clients here in South Africa. Morningstar's founder Joe Mansuto started the company by providing this type of research to the US market. So what does it matter? How will it help investors pick the fund managers that can help deliver them alpha? Joining us from Cape Town is David O'Leary, of course, from Morningstar. David, it's good to have you with us. So just give us an idea of what Morningstar is hoping to achieve in South Africa.
Well, it's really just an extension of our founding mission, which is to help investors make better decisions. So we've launched analyst-driven research reports that are meant to guide investors and give them an idea of which funds are best and which ones we would stay away from.
David, you're starting with the big funds in South Africa, and many of them have great track records. So is your job going to be fairly easy going forward, at least initially covering some of these big companies? And I mean, I've got the report here that you've written for the Ned Group Investments Rainmaker Fund, which has a track record almost second to none. It seems like you're starting with the easy stuff.
Well, we start with the biggest because that's where investors are putting their money, and those are the funds that investors most want to know about. I wouldn't say that it's an easier job because in a lot of cases there's more sort of that meets the eye than just the fund's performance. So in the Ned Group case, the fund has the asset base has grown significantly, and it makes it more difficult for the managers to run that fund because they can't invest in certain smaller companies, which traditionally have been a source of outperformance for them.
It certainly is interesting, and you must just ignore Warren. He's just being cheeky when he says your job seems easy, David. Let's talk about the process that you use when you're looking at managers. I mean, how do you evaluate them? Tell us some of the key metrics you use to evaluate them, and we'll start off on the, I suppose, let's look at the qualitative side of it first.
Sure. I mean, all of what we do is both qualitative and quantitative, and we sort of marry the two. But at the end of the day, the rating that we come up with is a subjective rating that is driven by the analyst's judgment call. The 5 factors that we look at, they're what we call pillars. They all start with the letter P. So people, process, parent, performance, and price. So each of those factors have sort of a robust set of questions and analysis that goes along with them to understand the 5 sort of key criteria that we think are important to evaluate when buying a fund. And
then how do you grade the managers using that, using those various things you've been going through now, those categories? I see that you've got the Ned Group Rainmaker Fund with a bronze grading.
That's right, yeah. So we use a medal system. So gold, silver, and bronze are reserved for those funds that we would recommend to investors. We also have a neutral rating, which we would say, the analyst isn't confident that the fund will either underperform or outperform. And then negative funds, where we actively think the fund, there's a concern that we have, and we think it was likely to underperform its peers or the benchmark index.
So David, you've given the Ned Group Investments Rainmaker Fund a bronze grading initially, and that's despite it outperforming the all-share index by about 4% over the last 10 years. So what do investors take from that?
So yeah, that's a great question. I'm glad you asked it. I think there's 2 things. One is that first and foremost it is a medalist, and it's a fund that we would actively recommend to investors. I think there's 2 issues though that prevent the fund from being rated higher, in my opinion. One was that number one. I guess just to step back for 1 second, the differentiation between gold, silver, and bronze is really a reflection of how much confidence the analyst has in that recommended fund. So a gold fund we would have more confidence in than a bronze fund. So part of the fund's bronze rating comes from the fact that I have just started to research funds here and just getting to know the firms, the managers, their process. That's something that takes some time to really get comfortable with. And so while I've done a lot of analysis, I've spoken to the Ned Group and to the managers at ABAX, I will need some more time before I become even more confident in my assessment. And then number 2, as I mentioned earlier, the fund has had a growing asset base, which I think prevents or makes it more difficult for the managers to invest in smaller and mid-cap domestic equity names, which has been a source of outperformance for them for a long period of time. And so, I'll be curious to see how they, continue to perform on a larger asset base where they're less able to play in smaller names.
David, let's talk about Morningstar's approach to evaluating the style of various fund managers. What is your approach here, especially when it comes to actioning that style and making sure, keeping track of whether what they're saying on paper is actually what they're doing?
Yeah, so a big part of it is just really a lot of heavy lifting and digging through data. So Morningstar collects holdings, performance, and operational data on literally hundreds of thousands of mutual funds worldwide. We have most of the South African universe covered here. So I'll go into our database and look at the holdings of the fund, quarter by quarter, and take a look at the types of names they own, when they're buying those names. If they're a value manager, are they buying them, after they've run up, or are they buying them after they've turned out of favor? What sectors are they in? What's the timing of that? How frequently are they buying and selling names? So if they're a long-term value investor and they say that they own businesses for the long haul, are they sticking to that, or are they buying and selling those names very frequently? So there's a lot that we can do because we have the data at our disposal.
And David, what happens if you find that a deep value investor, for instance, is buying stocks that look very much like growth stocks, or that he's turning over his portfolio very quickly? What does that say to you, and what are the consequences in terms of the analysis that you do on the fund? Would you then downgrade them if you find quite a variance in the style of the fund manager?
Yeah, it's a lot of the times, it's hard to, you don't get sort of black and white evidence of, you're not left with a smoking gun. But what you can do is say, these names look more growth oriented. The definition of what's growth and what's value is somewhat subjective. But you can certainly say that these, the stocks in general seem to be more growth oriented. And then at certain times, maybe they're more value oriented. And if the manager claims to be one or the other, then that would raise alarms. But then I'd start to look at performance. And is the fund performing as I'd expect a value fund or a growth fund to perform? And if not, then you're starting to build a case for, this fund is not particularly growth oriented, even though the manager says that he is, or he's flip-flopping and sort of changing his style a lot. And then at that point, it certainly reduces our confidence. And I wouldn't feel comfortable recommending a fund where I didn't feel like the manager applied their process consistently.
Is it important though to have funds described in a particular way? Because I think of some great fund managers, and Dave Ford's one of them. It's very hard to pin him down as to whether he's value or growth, and I'm not sure what he tells you when he self-describes his funds. So is it important that managers stick to a style, or are there not managers that operate across different styles as well, and then how do you evaluate them?
Yeah, that's a good question. It certainly is. The value growth pigeonholes are useful heuristics to sort of get a sense for a manager's style. But the truth is most managers fall somewhere in some degree of one of the two stereotypical styles, and even then there's all sorts of flavors of growth and value. So it does make it difficult, and that's why I sort of said earlier, you're rarely left with sort of a smoking gun. Managers aren't stereotypically growth or stereotypically value in a lot of cases, and so you have to make some subjective decisions and judgments. But really what we try to do is understand the manager's process, understand what types of names they look for and find attractive, and then try to say, okay, are those the types of stocks that are actually in the portfolio? We're not trying to second guess whether their process is right, but because there's more than one right way to do things. It's, are they applying what they say they're doing consistently? And it's a subjective thing, and it really takes. That's where this sort of building a confidence and an understanding of a manager, a company, takes quite a bit of time. And so in the case of the Rainmaker Fund, it's in a very impressive track record. I've been very impressed with Ned Group and the ABEX managers, but I'd want some more time to build my comfort level to make sure that I understand sort of the ins and outs fully.